everybody. Welcome to the Trading Market Technicals morning call video for Thursday, November 21st. Looks like the FOMC minutes actually got things going finally. Markets actually sold off for a third straight day. This is basically the longest sell-off we had in a couple of months. We've actually had one down day. Markets actually rallied back up again, and then two consecutive days was a little bit of a stretch. Now having three is really something to write home about. Nice to see a little bit of red on the tape. Just for market volatility. Anyway, real quick on the numbers: Dow Jones down 66, Nasdaq down 10, S&P down 6.5, and a Russell down $1.60. And this is all due to FOMC minutes. Now speaking about, they were mentioning about possibly tapering sooner rather than later. So the markets actually did nothing here. Here's a 5-minute E-mini S&P chart. As you can see, we're up about 3.5 now in the pre-market. But we did nothing yesterday from 9:30 all the way up until 2 o'clock when the minutes were released. We sold off a little bit for about an hour, and then the last 20 minutes we kind of flagged into the close with a little bit of short covering. So really, we did nothing here. And even if you look back, you can see that we've done nothing. We just literally just kind of streamlined into this channel that I made a couple of days ago, and we really have gone nowhere up until yesterday. So the thing is, what do we do? How do we prepare ourselves? Well, we had a taper talk back in, I think, May, and we sold off into June, and then we rallied again, and then of course selling off into that October 9th low. Even if they're going to taper, they're not going to taper. I highly doubt that there will be any type of action until after Ben Bernanke has completed his tenure, and that is obviously at the end of the year. And Janet Yellen really doesn't do much until, I believe it's March. So at the very least, it's probably going to be a March, some sort of a tapering beginning in March, maybe a little sooner, but I don't see much of anything. So even if we get the taper talks, that could be a little fuel for a catalyst for a sell-off, which is what the markets are in dire need of. And even then, that'll get us into at least a little bit of a dip that we can buy going into the end of the year. But again, one day doesn't make a trend, and even the 3 days, really, we haven't gone anywhere. It's only been 3 small days of a sell-off, and now the markets are back up again. So let's see what happens. I wouldn't get too crazy short yet. As you can see here, this is one of my my support areas of 1772. We missed it by about a point and a half. So this is the first target area I'm looking for, and then of course here, as you can see, the 1752, and then you got these lower areas here that looks like right now far distant away. But let's just keep an eye on the 1774, and then it would need to get a close on a closing basis. It would need to price needs to close below this on a closing basis for us to really start to look for a short trade here. Until then, I'd be looking for buying strong stocks on pullbacks and selling rallies on weak stocks until this market starts to get a hold of itself. Right now, I'm staying far away from any of the indexes. It's just not worth trading at all. Highly manipulated, and in fact, a lot of the stocks really haven't gone anywhere, but either moving lower and then bouncing back. It's just been erratic trading for the last 2 weeks. It's been crazy. But again, take a step back. Wait until the perfect timing comes, because there's plenty of opportunity here in this marketplace. Okay, so let's go right into the, I want to do a little bit of the bullish percent, which is a great indicator. Runs off a point and figure chart. We are still on a buy signal here, as you can see, and we did have a little bit of a blip here. But we're still on a buy signal in a bullish percent. Now, if you take a look at the USO bullish percent, and this here is still on a buy signal while we're hovering down to the lows here. I still really like where the oil is, but we need to see now oil prove itself that it's indeed going to break this bearish symmetry, right? Lower high, lower high, lower high, lower high, and higher, and lower highs and lower lows. So I like the spot here. It's been basing here pretty much most of November. I like to see it now start to really take out the highs here, and it's going to have to do so before you really. Now, look, can you be more speculative and take a trade here and put your stops below this area, which I'll show you in the charts? Sure, you can. But to me, I think a better bet is either It does have a double bottom here. Maybe we can get back above this area here, take it for a small position, and see where it goes, and then maybe build upon it on any pullback. But we've been really decimated. Crude oil really has been decimated since the September high. And it is oversold and now looking for some sort of a push higher. So this could be the fact that could play into this. And remember, the dollar was up yesterday because of the fact of the tapering talks, and crude oil didn't really do anything. It was actually down about 6-7 cents. So holding its own, another good sign that crude might be going for, might be at least getting a dead cat bounce. Something I'm going to be really hawking here, paying attention to. Okay, and then you have the bullish percent XLF, which is bullish, and I love the banks. When interest rates are rising, the banks eventually will be on its own. Now, yes, they did get hit a little bit yesterday on the sell-off, and that's normal, but when they realize, the market participants realize that that rates are rising, it's gonna affect their bottom line in a good way. The banks are going to start making another move. So any pullback in the banks for me, in the banking sector, I will be looking to buy. And you can see here, here's the BKX holding its own real nice, as you can see up in this area here. We're above that ascending triangle. Now we just need to take out the highs of 67 in the BKX. So looking for further upside. Now, speaking of the dollar, as you can see, the dollar did break this bull flag into this support zone of the 20 and 50-day moving average, and then you have this horizontal support zone. So it did break above here. So now, if the dollar can muster a little bit of steam to the upside, watch for commodities, watch for the precious metals to break down again. Okay. Speaking of the precious metals, take a look at gold. Here's identifiable head and shoulders pattern. We broke that neckline yesterday. Again, taper talks, not good for the metals. And remember, we showed you palladium yesterday that broke down and failed that breakout of that large symmetrical triangle. So when palladium started breaking down, remember, a lot of fundamentals show up in the charts way before they actually hit the tape. So when palladium started breaking down, I mentioned that the other day, said, doesn't look like gold is going to go anywhere. Now, that does not mean that gold could have had a dead cat bounce prior and then make the move lower again. So that's why I am not a big fan of being short gold at these levels. But I do believe that gold is headed lower, and I love the fact that if I can get a bounce in gold anywhere to that 1280 to 1300, which would be right up in this area here, I would be looking for a trade in gold with your stops above the right shoulder. Okay, but gold definitely is a short. If you can find your way in based on your trading plan, I'd be looking to short gold, and I'd be looking to buy crude oil. Okay, so take a look at the ticks. As you can see now, we're above zero. Let's see what happens in Thursday and Friday. We have some econ data early this morning. We have producer price index at 8:30. Obviously, the weekly jobless claims at 8:30 as well. And then we had the Philadelphia Fed survey for November. That's going to be released at 10 o'clock. And the flash manufacturing PMI as well for November is going to be released at 8:58. Okay, so we do have a little bit of econ data which can move the market. So that could also trump the chart. So let's just keep an eye on things. And again, stronger numbers are going to go on the tapering side of the Fed, saying, hey, you know what, this market is heating up. We're going to have to slow this economy down now again, and they'll start tapering. So just keep that in mind as well. Okay, so let's go into the VIX. And I mentioned yesterday about the VIX that we did get a sell signal in the market. And again, great indicator if you can use it this way. And we actually did get a sell signal in the market, a buy signal in the VIX. We closed outside of this band 3 days ago, which was on Friday. Monday we closed in it. That gave us confirmation, and we had 2 days of sell-off. So hopefully you guys caught that, or at least just get a heads up to tighten up your stops on any long position here. All right, let's go into the chart segment. And we have the SPY weekly chart. As you can see, we're getting stuck here right at the upper end of this range of this upward channel here, as you can see. So we're stuck here. Let's see what happens. We've got another couple days left here. This is the spiders. As you see, 3 days down. Really not much of anything. Yesterday was the biggest down day out of the three. We really just actually closed pretty much unched on Tuesday. But we'll see if we get some follow-through. Remember, we're coming into the holiday season, and Thanksgiving is next Thursday. So we usually get some sort of market reversal. It doesn't matter up or down, depending on what the market was doing. In this fact, it's up, so we get a reversal to the downside. That usually does happen. I don't know why, but just maybe think about it, some possible tax selling early on or position adjustments on their portfolios going into the end of the month. But anyway, we did get a little bit of a sell-off. We did break the 8, and we held the 8 on the close. So the first target really would be somewhere around the 20-day moving average, and then we would reevaluate it. But again, biggest 3-day sell-off, as you can see, in quite some time. This is going back now probably to August. We haven't had a 3-day sell-off. Oh, actually, excuse me. It was actually early September. End of September, we had a 3-day sell-off. So anyway, good little movement in the markets. I like to see a little deeper downside movement just to kind of unwind these overbought readings that we get on the daily charts here. Here is the diamonds, as you can see, holding up relatively well. We are above the uptrend line still of the 2012 lows, and we are still grossly overbought. So this is going to need to come in a little bit more to really get some movement to the downside. Transportation sector still holding up well. Broke the 8, now above the 20-day moving average. Let's see if we can get a little bit of pop to the upside. I'd like to see, again, maybe test this sideways trend line here back into the 122.70 area in the transports. Here is the IWMs. Again, weaker of the 5 that we follow, the sectors. But let's see if this can muster up a little bit of movement to the upside. I would like to see it test the 50 and probably let it get back down to this upward channel, this trend channel here, which is the 2012 lows. If we could get down to this area and bounce and hold, then that would be a nice little reset to these momentum indicators here. As you can see, not as grossly overbought as we are in the other ones, but nonetheless, we are still overbought, and I would like to see this kind of reset itself, actually, as well as all the other 5 sectors. All right, the XLF, as you can see, we are now testing this horizontal area of support, which was resistance at one point, and if we can hold up here, I think you're going to get the banks to move higher. And I still like Goldman, and I still like JP Morgan here. I'd like to see Goldman come in a little bit more, maybe come into this 20-day moving average. You can see the averages are moving higher. When they're moving higher, momentum is moving higher. So I'd like to see this come in a little bit more, and I'm going to start looking to get involved in some of the banks again. JP Morgan, just like a bull up here, guys. Again, extended. We need to have this come in. I wouldn't be buying JP Morgan here. If it's for a day trade, that's another story. But if you're looking to accumulate it, I'd let it come in, maybe fill the gap between here and hold tight of this uptrend channel of the the uptrend trend line of the symmetrical triangle here. Let it fill the gap or get close to it, and then start to move higher again. But I think JP Morgan's a good candidate for another long position here as well. And again, networking, part of tech, not doing too well. Again, we are still valid in this headline and this head and shoulders pattern, and I would be looking for either shorting the IGN or one of the components in there, the weakest one of the bunch. Look for a spot to get short the IGN. And again, Apple not doing too good here, holding its own. I'd like to get it down to that 50-day moving average. That would be ideal for me. And lastly is the Qs. As you can see, if Apple goes, so goes the Qs. We broke the 20, and a good spot really, guys, would be that 50-day moving average, and then of course this horizontal support just below that. So let's keep an eye on it, see what happens to the markets this morning. Jobless claims is going to be closely watched at 8:30. They're expecting 335 versus 339. So let's see if that actually gets a little bit of movement. Again, it's going to be closely watched because of the fact a tapering is tied to unemployment. So we'll see what happens this morning. Have a good day today. Enjoy the markets and be safe out there. We'll speak to you tomorrow. Take care, everybody.